Good evening, and welcome to the AJP Northeast Asia market close. Rising oil prices and long-term bond yields hit risk assets across the region, but the damage was uneven. Japan fell hardest, Korea reversed sharply, while China stayed close to flat. The common pressure today came from oil and rates. Brent crude traded above $91 a barrel after the temporary U.S Iran truce expired, while long-term government bond yields climbed to multi-decade highs, as investors priced in renewed inflation risk. Japan took the heaviest hit. The Nikkei lost about 2.4% as Japanese bond yields climbed to levels not seen in 3 decades, and expectations grew for another Bank of Japan rate increase. Korea finished down about 1.6% after the KOSPI had rallied more than 3% early following a holiday. China was the outlier, with the Shanghai Composite currently trading down only about 0.2% as energy gains cushioned weakness in artificial intelligence hardware. The KOSPI closed around 6,864, down about 1.6%. The reversal was the story. Korean equities opened with strong semiconductor momentum after gains in U.S memory and storage names, but higher oil and bond yields changed the trade during the session. Samsung Electronics fell about 2.2% to around 268,500 won, or roughly $190 at an exchange rate near 1,411 won to the dollar. SK hynix moved against the market, gaining about 1% to around 1.66 million won, or about $1,178. That divergence matters. Investors were cutting broad risk, but not abandoning the memory chip earnings story altogether. Samsung Electromechanics dropped about 7.6% to around 1.44 million won, or roughly $1,020. The fall gave back part of last week's surge and showed how quickly higher beta technology suppliers were hit once yields moved higher. In Shanghai, the composite was currently trading around 3,975, down about 0.2%. China was more resilient than Korea and Japan, but the internal split was clear. CNOOC rose about 2.2% to around 33.6 yuan as crude prices climbed for a third day, making energy a hedge against the same geopolitical shock, hurting growth and technology shares elsewhere. Optical component makers moved the other way. Zhongji Inolite fell about 1.8% to around 982 yuan, while Eoptolink dropped about 3.4% to around 451 yuan. Both sit directly in the global AI data center supply chain, but also remain exposed to U.S China trade policy risk after Washington moved toward restrictions on Chinese optical transceivers. The macro backdrop was weak as well. July retail sales rose only 0.6% from a year earlier, and industrial output growth slowed to 4.5%, keeping pressure on Beijing to support domestic demand. The Nikkei 225 closed around 67,542, down about 2.4%, the weakest performance of the 3 markets. Japan had an extra problem, its own bond market. The 10-year Japanese government bond yield reached roughly 2.95% during the session, a 3-decade high, as inflation concerns and expectations for another Bank of Japan rate increase intensified. Advantis fell about 4.9% to around 35,990 yen. The Semiconductor Testing Group has been one of the main beneficiaries of the AI investment cycle, making it especially sensitive when discount rates rise. SoftBank Group dropped about 1.4% to around 5,806 yen, while Fast Retailing lost about 2.3% to around 75,040 yen. The message from Tokyo was broader than a semiconductor correction. Higher domestic yields, higher oil, and elevated valuations combined to produce the region's deepest decline. Today's divergence was not about whether the AI trade is alive or dead. It was about what survives when the cost of capital rises. SK hynix held up, CNOOC benefited directly, but high duration technology and consumer heavyweights were marked down, especially in Japan. The open question is whether oil above $90 and rising long-term yields are a temporary geopolitical premium or the start of another inflation-driven repricing across Northeast Asia. In the next briefing, we will watch whether oil and bond yields extend their climb, whether SK hynix can keep resisting the broader Korean tape, and whether Shanghai's relative resilience survives into the close. Subscribe to AJP for the next Northeast Asia market update. Thank you for watching AJP.